Today we're going to be looking at Hertz stock, which just popped up on my screener, and I actually decided to buy some shares in the after hours as a number one trending stock on my screener. So what I did from there, I checked my watch list and I added it to my watch list, and we could see that it had some green KPIs, which means these are like the things that I look for when I buy stocks. You can see that Hertz is right here. Let me make myself a little smaller there. Hertz is right here, so you can see that Bill Ackman is actually an owner of it. He bought around $3.56. Overall, that's his cost basis. So it actually dropped to 150 in the past 52 weeks. And we can see that this multiple right here really stands out, which is the price to sales multiple. And it's 0.06. So that is really low. Almost no stocks have that low of price to sales multiples, and it makes it really interesting to investigate. And then we can see the 5-year CAGR, the compound annual growth rate. That's like the revenue growth rate over 5 years is 10%. So that's pretty good. And then we can see that it's oversold. 27 is considered oversold in the short term. So basically negative margins, besides 2025 is when they finally got positive operating margins at 3%. That's when the new CEO came in. So he's making good changes, focusing on getting rid of all the Teslas that they bought, which heavily costed them on depreciation. And they bought at the top when Tesla vehicles were expensive. So he's getting rid of those, focusing on ICE vehicles, which will help lower depreciation per vehicle, and that will rise net income going forward. And we can see negative tangible book value, so we want to see that number going up. And there's a few risks with this company, a lot of risk actually, because you can see by this debt number, it's a crazy debt number. It's minus 19 billion. So they have $19 billion of debt, and their market cap's only 854 million. So they're heavily leveraged. So doing a normal discounted cash flow model won't do any good. So I did a quick research over their investor presentation, but I'm just going to share with you my notes, my quick research on the stock. What I found was 94% of the fleet is now 2025 to 2026 ICE vehicles. So no more EVs. It's the youngest fleet in a dozen years. It should stabilize the depreciation, hitting their target of $302 depreciation per unit, giving them a runway for 2026 to 2027 to build a cash war chest for the 2028 to 2030 debt wall of about $6 billion in debt. We can see right here, this is from the presentation, that they have about $5 billion coming up in 2028, 2029. However, their 2027 and 2026, there's about no debt that's really due. That gives them less CapEx because remember their vehicles are new. So they won't have to pay all that CapEx, which will boost free cash flow in that time frame. So I wrote down a few notes here. 1 billion EBITDA in 2027. That's what the CEO says they're aiming for. And usually the corporate interest from the debt is about 500 million. The corporate CapEx is 100 million. And the historical fleet maintenance would be around 300 million. And now it's zero since there's pretty much a new fleet. There's no really, maybe like oil changes and smaller, maybe, but I'm just using napkin math here. If we do that simulation, we get about 400 mil free cash flow, and the current market cap's 811 million. At a $2.28 share price, you can assume a 6 price to free cash flow multiple, and that'll give you 2.4 billion. So divide that by their current share price, which is 356 million. You get a $6.74 share price. So that napkin math shows that there's dislocation in the current price. There's certainly risk with this stock because of the high debt. And then, for example, my dad actually just used a Hertz rental car, so that's bullish. Make sure to do your own due diligence. We can check out the short interest, which is 28%. It's probably around like actually 21% if you account for like the corporate hedging. Let's see, where is the, oh, there it is. Okay, we can see Bill Ackman is owns 70 million in Q1. Oh, dude, where is short interest on Robinhood? Okay, cool. So it's about 28% actually. If you see all these shares, so there's $106 million or 106 million shares sold short. So overall, that would be 28%. We can also look at FinViz. I like using FinViz a lot more if we're going to be looking at short interest. And it's 28%. So could give a little bit of a squeeze here, which is kind of exciting. And remember, I just found this stock looking at the trending stocks in my stock research tool, and I was like, what the heck? Hertz? Why is Hertz up there? And then when you see price of sales of a 0.6, you're just like, holy crap, this could be an interesting deep value stock. And they have like 500,000 cars, so that could add to the tangible book value. But yeah, certainly there's risk. But yeah, that's just my quick overview of Hertz stock, and we can check out my percent allocation towards this stock. And if you subscribe to my website, you can see my, actually you don't even have to subscribe. You can just go to my website and click demo, and you can see my portfolio holdings in the link below. You can see that I have a 2.7% allocation in this Hertz play, just because it could be a quick double with this high short interest, but it could also go bankrupt. But remember, in the next 2 years, there's only a small amount of debt that's due. So I just figured napkin math, let's buy this stock, right? So this is like up by position. Hertz stock, it shows that I'm down 30%, but it'll update tomorrow whenever the after hours numbers come back. And yeah, this is a new feature I added. So I'm constantly adding new features to my website, and it's showing like App11 is a good stock. You can see by the blended IR, you can see which ones I think are the most bullish. But yeah, thanks for watching, guys. If you like this video, consider watching my Comcast video right here.